Hey, Andy, investment crowdfunding that allows retail and accredited investors to invest online in promising startups and small businesses has surpassed $1 billion in funded capital since the launch of the industry in 2016. It almost broke another record for the third quarter and is on pace for an all-time high this year. Data from a new report to be released by Crowdfund Capital Advisors shows deal activity topping $139 million in the third quarter. That brings the total to more than $408 million this year, and money was spread across 1,125 deals. Year-to-date value is already 282% above the record set last year, and while Mega, plus $1 million in funded deals, continues to grow, the vast majority of deals are sub $1 million. Mega deals, though, are increasing. Those which raised at least $1 million made up 11% of the deals funded this year. Since the SEC raised the maximum issuers can raise from $1 million to $5 million back in March, the average size of mega deals has increased 44%. Another factor is the participation from some more traditional backers. Venture capitalists are increasingly dipping into this asset class by syndicating deals to include retail investors, a shift from when the industry first launched and there was no venture capital participation. This is adding to the size and the value of these deals. Also, we are seeing more participation from well-known incubators like Y Combinator and 500 Startups, which are known breeding grounds for potential unicorns. More than 20% of the deals came from ones where these non-traditional investors were involved. Retail investors, however, continue to dominate this funding landscape, and the report also highlights no shortage of issuers or investors in the coming quarters. Interestingly, up to 60% of the most funded deals included at least one woman or minority founder, showing the promise of democratizing access to capital to these traditionally underfunded groups. Software application was the biggest sector, with over 20% of the deal volume going to that sector, followed by specialty finance and diversified media. And finally, geography. The Bay Area, again, dominates with capital, followed by Austin. However, when we look at deals, New York's share of deals outpaces the Bay Area, with Los Angeles a close third. Julia?